Yeah, man. Greetings, greetings. Sam, what go on? Ramon, Chrissy, you up on yourself, you don't know.
Hold on, I run that.
No, man, negative, man. Never run, is it?
Oh, not for run. Oh. Just that's all I got.
Well, Ramon, you must say a shell market, bro.
A couple man will I shell it. Couple man will run and shell it. Ian and shell it. And nil him name in the group. Yeah.
Yeah. But no,
Yeah.
All right, good evening, everyone. Please just let me know if you are able to hear me. Just hit one in the chat box. Let me know that everybody is able to hear me. The audio is coming through clearly. All right, good night, Chrissy. Just saw your message. All right. So welcome to another weekly market scan where we take a look at the majors, the major crosses, that's the major USD pairs, which is the Euro USD, Pound, CAD, Yen, the Swiss franc, the Kiwi dollar, the Aussie, and also gold. So that's the pairs that we pretty much focus on in relation to the US dollar, right? And then towards the end of the sessions, we have a look at any pair that the would have been sent in to me from earlier, or I might just ask you guys who are on the live call to give me anything that you would like to get my overall feedback on. The core function or fundamental behind these market scan is to enable you guys to have an overall understanding of the financial market in terms of top-down analysis. How do you determine at what point we expect the market to make its overall moves, and if it do moves, to what level we're expecting it to move, right? Now, we here at WaveFX, we have our own personal execution techniques, right? So we consider ourselves to be institutional traders. So we pretty much follow the price movements and follow the directions and enter the markets as the banks would enter their overall trades as well. So that's pretty much how we assess the market. We try to identify the entries where we can get wholesale value for our currencies right before the market actually moves. Once the move becomes obvious, that is the time that we look to exit the overall trade, right? So without further ado, let us get started. And let me see if I think I'm already sharing the screen. And this here that we're looking at now is Euro USD. And in last week's session, we were up in this overall area. And we were saying, based on where the market is, if we looked at the daily time frame, we were seeing a clear indication of a W pattern out of the market, or an M pattern, I should say, sorry, from the market, right? And the general characteristics of these is for the retest, which we highlighted from the week before, and the market played out superbly. And then we're saying from here on out, we should be expecting the market to continue to the downside. So, and that's the overall move that we got from the market as well. So we are now in a key level for price right now. I don't want to really call this area support, but like our support zone is already way down at 100914. That's where the market is right now, where support is. But what we're expecting out of the market now is to see some sort of bullish price action coming into play now. So before, we were anticipating price to come all the way down into this level. Based on price action and based on what's happening in the market now, we can anticipate the market to at least push back up in this overall area before making any further movement to the downside, right? So that's ultimately what we'll be looking at. It is all depending on the strength or the weakness of the dollar in itself. We can see price even make an attempt to hit back up into these highs, which would be what, around 111.78, right? So we can expect any of these movements coming in out of the market next week. So if we look down now on the 4-hour time frame, the level that you should definitely be looking at is this entire area that we highlighted last week as well. We want to see what price does in this overall vicinity. If we get a close beneath this level here, I'll highlight that level for you, right? This is the level that you should be looking at, 1.0991. That's the level that you should be looking at. Failure for the market to close beneath that area, you could easily find yourself in another move of about 60-65 pips to the down side. However, I would actually be looking for further upside movements out of the market, possibly up into these levels here. Right, so this is what I would actually be looking at coming, finishing off this week, and then heading into next week, we can expect further movements to the downside out of the market. Right, so based on your overall entry rules that you would have, and I'm assuming that each trader here should have their own rules for entry, things that you are looking at, signals that you identify when you're entering a market or when you're entering a particular trade. You can utilize your rules for entry and you execute your positions accordingly. Right, so the immediate target point for this would be for price to test back into the highs. Pound USD. Now, last week we were up in this overall region here, and I was saying that what I would ideally want to see is for the market to push down into this level, give us some sort of retest, and then continuation to the downside. We got the break down lower, we got the retest, and the market continued lower. However, we saw some strength coming out of the market in this overall zone. Right, bullish pressure came back into the market here. Today, throughout the latter stages of this evening, we realize that the pound itself strengthened, and the main reason for that, there was no real financial data, no fundamental data. However, it was just a pure and simple electoral poll that came out of the market, where the Conservative Party pretty much have a commanding lead out of the poll in terms of possibility of being re-elected come December 12th, which is the British election. Right, so we saw the market reacted to this news in a positive way, and this is simply because once there's an election, once a sitting party is favored to win, it gives the market some sense of stability across the overall country in itself, and that in itself, stability breeds strength out of the currency. There's belief, there's optimism for that party in itself. Once there's a new party coming in, there generally becomes an overall shift in direction, and this in itself breeds uncertainty, and that now you generally find to see the market weaken across these news. Right, so based on where we are now, I would still be holding pound for a short play. In fact, I'm still anticipating this market to push to the low, to the downside. Based on where we are now, I would just simply anticipating and looking for entries to possibly short this market. Right, again, this level here, just the same as we identified that level last week to be the key area to watch. It's the same thing this week again. We're right back in that overall zone in terms of price. So we'd definitely be looking at that overall area as the week progresses. On the daily, just to take a look on the daily time frame, let's just clear this up a bit. On the daily time frame, we find ourselves pretty much in a overall range, and we're still expecting price to push to the downside in itself, simply to do a moving to close in on the 20 period moving average here on the weekly time frame, right before it continues with its bullish momentum. Right, so we're anticipating the market to approach this area, and then from here we could possibly look for longs out of the market. So as it stands now, if you're looking at a trade, I would be more inclined towards pound to the downside. Right, so that's what I'll be looking at out of the market. USD CAD. Last week, pretty much, we were saying based on where we are now, we're at a pretty significant level in terms of support and resistance for CAD. And I was saying to you guys that I would be expecting a lot of sideways movements out of the market, and the market played out accurately with that as well. We didn't really came all the way back down into the lows of 132, 132.30 in that overall region. But I was simply saying I expected the market to respect the 132.80 in that overall zone. And that's what I was looking at to say the market should come down and respect these overall lows. And then from that point, we should be doing what? Simply looking to target the overall highs of the market. Look for the price to potentially hit 135, right? However, I was saying expect to see some sort of sideways movements out of the market. So now we are getting this movement here. I still expect this move to continue for a while. So I wouldn't be looking to really pull the trigger to press anything at all in terms of that buy button as yet on USD CAD. Sit on your hands, wait for the market in itself to determine its overall course. You could see further movements back down. Like I said, this entire area is what you want to be looking at. So depending on how you trade, depending on your strategy, you just might find intraday positions that you could execute in and around this overall zone for USD CAD. Right, so that's all pretty much what I'll be looking at. We could easily, based on where we are now in the market, we could see the market potentially approaching this zone here, which is the 132.40, in and around that area, right? And then from there, back up into the highs. So because this is a weekly scan, this outlook that I'm providing would take roughly a full week to develop, right? So this is overall what I'll be anticipating throughout the remainder of this week, heading into next week, right? So this is the overall play that I'll be expecting. Further sideways movement, consolidation out of USD CAD. USD yen, as I was saying, we're anticipating price to do what? Approaching these overall highs. I expected the market to give us some form of movement to the downside before ascending higher. However, I was saying the area that you want to watch is this zone right here. A break of this level would definitely send the price up into this overall area. And we can see that we pretty much came into that target point less than 25 pips away from where that target is. So if you would have taken the trade here, you would have been able to profit at least 85 pips off this overall move. If you had taken it out of these lows here, you would have been even better on your part. So what are we expecting out of the market here now that we have achieved this overall zone? And trading is pretty much as simple as buy high, sell low. So that's what we're looking at here, shorting the overall market back down into these lows, right? So this is ultimately what I'll be looking at out of the dollar yen, and simply for market to approach back in the 108 region, anywhere from 108.50, 108.20. That overall zone is what I'll be anticipating or looking for in terms of price action. Right, there wasn't major movements in the market, so there's no real sense of doing a fresh analysis on these trades, because once you have done your analysis on your peers, you would have identified your zones, you would have known your position in the market. So it's all about trading price action at this stage, right? So that's all we'd be looking at out of dollar yen. In terms of USD Swiss, again, market played out superbly for us. We're saying what? We want to see some form of movement to the downside here. If we look, this is where we were at around 7 o'clock. Let's see if we can identify that. Right at 7 p.m. we were here. So this was our. Let's see if we can highlight that candle. This is where we were at the start of the session last week, and we were saying anticipate to see some sort of movement back into this overall area. You would want to be watching where the top of this zone, a break and a close above the top of this overall zone, then you can definitely get the market to push towards the highs. But ultimately, we were anticipating price to approach these overall areas here, 0.9948. So once we're there now, all we're simply doing, again, simple maths, buy high, sell low. So we're pretty much getting back on the ride to the downside. We have ride the wave to the top. We're simply trying to ride the wave back to the downside here. NZD USD. Again, we're anticipating the market to simply push down to the back into these lows here into support 0.637 in and around that overall area. Instead, we got a bit of sideways price action. Market simply consolidated in and around this overall area. If we look to the daily just to assess what the market did there, just to give a quick assessment, to take a quick look back at the charts in itself, we realize that we're pretty much in this resistant level. The market did not make any attempt to switch to the downside. So what I'll be anticipating ultimately heading into next week is simply for the market to break this resistance zone. And the level that I'll be looking at will be up in these overall areas. Right? If we should take it down to the 4-hour time frame, we could easily find price just simply testing these lows here before continuation to the upside. So you might find the market push down here before continuation to the upside. Sorry. All right, but ultimately, again, your overall zone to be watching is the top of this level here, 64.30. That's the area that you want to be watching to see what price does around that overall area. However, I'll be looking for further consolidation out of this market and possibly movements to the downside in the short term. And then heading into next week, I'll possibly be looking for this market to push back to the upside. All right, so that's pretty much what I'll be looking at for New Zealand dollar. Aussie dollar. Last week in the session, we said, well, the session before, we simply said that we're anticipating the market to range around this overall area. The market did just that. Last week I said the fact that we're in this overall zone now and we got a slight push to the downside and the market retraced to the highs, what I would be simply looking at, further play to the downside, right? And just as we said, the market simply played out perfectly. Now, I still believe that there's further movement out of this market to the downside. So I'd still be holding a short bias on this trade for further continuation of this market to the downside. And the target area, 67.24. That's the overall area that I would be looking at as a target point for this overall market, right? The most you would find is possibly a play right back to that area. But all in all, I'm looking at Aussie to the downside. Finally, we're looking at gold. And I said again last week, based on where we were, if the area is 1480, that's the zone that you want to watch. Any rejection out of that zone, look for gold to head back to the downside. Close above that area, we look to target where 1487. We got the rejection in and around that same time, that same night we got the rejection. Market simply give us the a retest of that overall area and then continuation to the downside. We were able to capitalize on these moves with the guys in the mentorship program as well. We collected we swing it to the downside, we got moves to the upside on this. So it's been a pretty good trading week in itself between last Wednesday and now for gold. What should we be expecting now out of the market? Simply another push to the upside. Right? We could see the market at least make an attempt now to actually test the 1480 zone. And then from there, we can anticipate another swing to the downside. This time we'll be looking to overall break this support zone and head down to close off this overall correctional move for gold, right? However, what I'll be focusing on now is for the market to push to the upside, right? You can utilize, again, like I've always said, utilize your overall rules for entry to capitalize on this. And I think that I'm already in a trade with this now, long in a long position to the upside with this as well. And again, my target area is in around 1480. All right. So if we should do a quick recap of the market in itself, we said that for Euro USD, we'll be looking for long opportunities now out of the market. Our target zone is about 11,072. That's our target zone for Euro USD. For Pound USD, we'll be looking at shorts out of the market and we'll be targeting the 126 area. Based on your rules of entry and exit, you would find multiple areas where you can take profit, re-enter your trade overall. But all in all, we are shorting pound all the way down to 126. USD CAD, expect further consolidation out of this overall pair. Right, not much to be said about this. Areas to watch: 132.40 and the top of your recent highs, which is what, 133.20 or 133.30, in and around that overall area. That's what you want to be looking at. For USD yen, further movements to the downside out of this pair as well, targeting 108.35. USD Swiss, pretty much the same as well. We are looking for further plays to the downside, and our overall target right back in support in and around these areas. No, bring my phone, please. And it's 99.09. Those are the levels that we'll be looking at. For NZD, we'll be looking at a bit more consolidation out of the market before price pushing higher. Right? So that's what we'll be looking at. Here, our overall target zone is about 65.19 AUSD. We're still looking for continuation to the downside out of the market here. And the levels that we would be watching overall is what? 67.24, or we can look for any push to the upside. The area that you want to be looking at is the 68 area. anywhere in that level, you can anticipate the market to push to the downside, right? So there are two pairs, and for gold, like I said, looking for the market to head back into the 1480 zone, 1470, 1480. That's the overall area that we'll be looking at for gold, right? There are two pairs. If there's anything that you guys want me to look at, you can send them in. I'll take a look at them in a few. I'll just be focusing now on the ones that was sent in earlier. And this is to look at one. Let me see. It's pound CAD and pound yen. So let's look at pound. Let's look at pound CAD first. It's been a while since I've looked at this pair, so just give me a time, just a minute, just to give a quick assessment on this pair. Overall trend for pound CAD is down. However, we're approaching resistance now in the market. Monthly time frame. Oh, monthly time frame giving you something else. Let me see. This definitely looks higher. Okay, let's see. So this is a level that I should be looking at. CAD looks to the downside for now, temporarily. However, the market in itself looks weak. So the only thing that we should be looking at from CAD is pretty much just a small retest out of this overall market. So the area that you'd be looking at the moment, it is down. However, we should be looking for potentials to possibly play the market to the upside. All right, so for CAD, immediately you would want to be looking at retest of these overall areas. So this is the level that you should be looking towards. $1.69. That's the overall zone that you want to be looking at for CAD. Let's see, yen. We're looking for the market to push down. Didn't get the market. We were looking at this pair last week again for somebody. I don't remember who, but I said that we were already in a trade in this, short in the market. We ultimately exit the market right around this level here. We got out of the market at the bottom of the range here. Think, if I'm not mistaken, no, I don't remember if we actually bought this pair, but I know we sold it off a couple times. Don't remember if we bought this. I know some one of the students out of the mentorship program, they bought this pair, analyzed it superbly, and capitalized on it to the upside. I don't remember if I actually took this trade. I would have to check. But we saw the market approaching this overall area. We saw the build up at the bottom of that range, decided to exit the market at that level, and we got the market up back into these areas. We got in again for another push to the downside, And based on where we are now, we are in a pretty interesting area for the CAD, for the yen. Let's just clear this up. Market simply came back into the top of this overall range. So we have pretty much pure consolidation happening out of the market now. I would be looking to short this pair. However, I wouldn't short it just yet. Let's just see. That's 115 pip. That's not bad, really. But if we're looking at a weekly outlook for this overall pair, we should be looking at the market to head back into these lows. In fact, like I said, I'm still holding the market to approach these areas here. 137, 138. That's where I'm ultimately leaning towards the yen. So I'm not really looking to be buying this pair as yet. Still need to see overall movements to the downside out of this before I look for any buying potential. So my buys out of this would be down in these overall areas. Now, I don't want you guys to misinterpret me when I say that when I make mention of buying and selling in terms of long and short of the market, I'm looking at this current stage where we are in the market. The overall market in itself is long. However, I would not be looking to buy the pair. And remember that I tend to hold on to trades for a longer period. So for my areas where I'm comfortable executing a long-term position, I would not be looking to buy anything in and around these areas, simply because the market in itself looks too overextended in terms of where price is at the moment. Right? So I'll be looking for movements to the downside anywhere in this region, or even for the market to come back down and test these overall lows. Either one is very, very possible for the market, right? So I wouldn't be looking at that. As it stands now, this move in itself, we could very well see some more plays to the upside before the market push down lower. But like I said, in order for me to give you any detail, I can't really give out a level in itself to look at without going directly into my overall strategy. But I would simply say, look to short this market in itself, right? I still believe that there are further plays to the upside, but I can't really go too much into this overall move. But I would be looking to short this market all in all. All right. Rich one says Euro NZD, and then Chrissy CAD JPY. So I look at Euro NZD first. Euro NZD is long. I don't have to. I can tell you that because I have a trade that I'm anticipating to execute throughout the course of tonight, heading into tomorrow, right? And but I'll be looking to long this overall market, right? So that's what I would pretty much be looking at out of Euro NZD. Your overall area to be looking at is pretty much where price is now. That's the zone that you want to be looking at, right? Based on your overall strategy and your rules for entry, you can determine your entry point, but the overall market for this trade is to the upside, right? Your areas that you want to be looking at would be in and around these levels here. These are your target points, right? 73.16. These are the levels that you want to be looking at for Euro NZD. CAD. I don't think I have CAD here, so let's just type it. CAD JPY. Okay, I think we did this pair for somebody here some time ago. I don't really remember. Let's just do a quick look at it. Again, further place to the downside out of CAD. We can see that we have a confirmed downtrend in the market here in terms of a bearish W coming out of the market. Let's see if I can find this drawing tool. So you have market coming down. Boom. Well, you have the first move from here. Retest of these levels. Push down. Confirm the downtrend is active. Retest of the highs. Look for another push to the downside and simply to watch for a break beneath that overall area. Right? So the overall play for CAD would be to the downside, and I'd actually be looking to target about the 80 zones. So that's ultimately what I would be looking at out of CAD JPY. Right, we have a smooth and clean downtrend out of the market. Your entry points should help you to determine how you approach this this trade in itself. The areas that you want to be watching in terms of resistance levels, right at the top of this channel here. If you're looking to short this pair, then even though I said that you're looking at down in the 80 zone, your first target point should be right here, right at these lows. This becomes your first target point that you want to be assessing your market as you hold on to your position to the downside. That becomes the area of interest for you. All right, so that's the level that you want to be looking at as you approach this pair. Right, if you're not in this trade yet, I would not suggest to open a position out of this market as yet either, because it very well might give you another swing to the upside. If you look at that, let's see what the 101 is doing. This could definitely get another swing to the upside out of this pair. So I wouldn't really look to short this market just yet. Wait for a better position. Well, again, like I said, that's just my rules that I have based on how I execute a position in the market, right? So, is there anything else that you guys would like me to take a look at for you? No problem, Chrissy. All right. Any other pair that you don't like me to look at? All right, then. So we have pretty much an early night here. Again, as you approach the market, guys, always remember to approach with caution. Trust in your analysis. Do the homework, and don't be afraid to execute your trades. Right? If you enter a trade and it doesn't work out for you, then there are multiple lessons to be learned in that overall trade that you take. When you say wholesale price, what do you mean? Well, it's pretty much institutional trading. We go in our trades when the bank is ready to go in their trades, right? So the banks ultimately move the market, and in order for the market in itself to move, the banks can only do one thing, because the banks don't depend on leverage in order to trade. They have to use their own cash. They cannot use leverage. However, because they're the ones that ultimately determine the strength and weaknesses of the overall currency based on the inflation rates, based on the inflation targets that they would have from their designated central bank. So, take the US dollar, for example. If the US dollar is the central bank for the US is the Federal Reserve Bank. They're the ones that ultimately set inflation targets for each of the banks operating in that country. And the inflation targets that they set, the banks now determine interest rates on the that they would issue to lenders, persons looking to buy car, mortgage, buy house, business loans, all these things. They need money to do that. So the banks in itself now they set these interest rates to become more marketable to in the marketplace, right? So at certain points in the market, you can identify where there is a need for the market to ease off either its bullish momentum or its bearish momentum. At these points in the market, when they're looking to ease on the overall momentum of the market, they would simply need to step in the marketplace and ultimately take charge of the price movements in itself, right? So it's not really a currency manipulation, but it's more of control of the currency in itself, because the central banks in itself have inflation targets to use. If there is if there's interest rate that is too high, less people would want to take out a loan, less people would want to use it to buy a car, because the interest rate that they would have to pay is too much. So the banks now would have to step in to control this inflation in the market, and they would simply need to stock orders in the marketplace. They have to buy up their reserve, or they have to flood the market with more capital. So if the market is too high, they have to flood the market with more capital, because they need the price to come lower. And the only way for the price to come lower is if supply is large. And if supply is large, less and less people will want to hold on to it. Because if everybody have something, then it's no longer valuable. That is why we find that Toyota Corolla is so cheap, but yet still Mercy, Range Rover, and all of these things are more expensive, because there's a production cap for each of these vehicles. That's why the Bugatti is so expensive, because there's a production cap for them. We know that they're limited edition vehicles, right? Ever so often they change. However, Toyota and Nissan, they're made on a production line, right? So there are multiple of them out there. So because there's such a vast number of vehicles out there, the value must be cheaper. So if the market in itself is pushing higher, what it is simply telling us is that investors are buying up the US dollar, and we're talking about the US now. Investors are buying up the US dollar and they're holding on to it. So less US dollar becomes in circulation. There's less US dollar in circulation. So the demand for the US dollar becomes more. So the banks now need to step into play and to control all of this movement of the capital in itself, of the currency. So they would now need to flood the market with with cash flow. They need to pump more US dollars out there in the market because they realize that they need to control it. They need to ensure that there's enough cash out there to ultimately go around. And the more cash that is out there, the cheaper they can allow, the cheaper they can get the vehicle, or the cheaper that they can get the currency for to make it more attractive to other people. Right? That's just pretty much economics and how finance in itself works. Right? So in order for the banks themselves now to do this, they must buy in order to sell. And remember that when you're in a long position, you need sellers in the market because you are simply buying. So you need somebody on the other side to sell you what they have. So you're pretty much buying you're into the market to go along. When you're exiting the market, you're simply doing what? Selling your position. So if the banks need the market to go lower, they simply need to flood the market out there. They need to sell, sell, sell. Get rid of they need to flood the market. They want people to buy what they have. So they're becoming sellers. So they're becoming sellers. And by them becoming sellers, so they're flooding the market with their capital because they want people to buy it. But at the same time, the more that the capital that they put out there, it's a ripple effect in the market. So you find that the market starts to go lower. So the ones that had their overall money saw the value going lower and want to get rid of it. So they are now going to sell it. And that ripple effect now is what the bank is looking for because they need to buy up back the currency that's out there. They need to own the currency so that they can stipulate the interest rate and how the market in itself operates. They need to control inflation. And in order for them to control inflation, they simply need majority of the currency because as long as they have majority of the currency, then they ultimately determine the interest rate for the currency. That's pretty much what it is. Right? So the charts in itself always give you these points in the market that we simply look for to see when the banks are coming into play. Because investors will move the market, large speculators. You have hedge funds, you have mutual investment companies, you have manufacturing companies. And as long as you have enough money out there, you can invest in the market. Right? You can buy capital, and these players don't use leverage. So they are the ones that are helping to move the market in itself. So we simply allow the market to do what it's doing, and we look to identify at what point the banks are coming into play, and we simply try to capitalize on that. There will always be footprints out there because the banks cannot just jump out there and start to buy or start to sell. They have to do it in increments. They have to stock the market in itself, take their time and stock the market because they have to disguise their overall movement. Because if you realize that that's what they want to do, you're simply going to hold on to your thing. Right? You're simply holding on to it. So that's pretty much what they're simply trying to do. Right? So we have our direct strategies and we have certain signals that the market always leaves behind just before it makes its overall moves, and these are the signals that we want that we look for. And that is one of the reasons why when you see the trades that we post and the trades that our students post as well, you realize that our trades have minimal drawdowns because we are approaching the market just before the market starts to move. So we're entering the market just before the market starts to move. So we execute our positions with minimal drawdown periods. So that's pretty much how we teach it. And everything that you see or you hear me speak about in these sessions or in the trading in the group in itself, my students can tell you that I practice what I preach. So I show them how it's done through my live trading sessions every single morning. So I'm live every morning between 5 to 7 a.m. I'm up with my team trading with them, and all the positions that I am taking, it's there pretty open. So you see what I'm doing. I'm live from 5 to 7, and then I'm again in it from 9 o'clock all the way back to 11:30, sometimes even later. Because once I'm finished working, I take the time out to educate my team and let them know what to expect out of the market. And this is simply different from the training sessions that we have at the end of each week. So we have training sessions every Monday. We do the live session here now, like what I'm doing now. At the end of these sessions, if they have a question and they need me to look at it for them, I simply pull it up back, and I look at it and give them my overall entries. We'll look at the overall strategies. So it's a team effort. So I'm not just here trying to tell you guys that we are this type of trader and we're this type of trader. No, we simply practice what we preach. And that's just pretty much it. I know I kind of go off tangent there, but it was all a part of my explanation, right? So wholesale price is simply trying to get in when the value is dirt cheap. That's pretty much it. So when you go to the wholesale, you buy things in a bulk, and when you buy it in a bulk, you get it cheap. So that's simply how we approach the market. We try to get in at the bulk rate. And then once everybody see the market going and everybody have it now, we carry it back out the road, go sell it back to the man that walk on the roadside. And we just take the profit because them already start see the value in it. But we see the value long time, so we did buy it. And now we are looking to sell it back before everybody else start buy. Because once everybody else see the move and start to buy, the best belief so that shit going to turn around. So we don't want to be holding on to our positions at that time. So we buy low, sell high, and we sell high and buy it back low. All right, so we leave it there, guys. If you have any questions, you can always post them in the discussion group. That's the one that's very interactive. If you're new to the group, you don't have to worry yourself either. We're all here to learn, and we're simply here to help each other to get a better understanding of the financial markets. What you cover on a day-to-day basis working with me can be applied across all financial sector. It doesn't matter what it is that you want to trade, because for me myself, I trade stock market, and so I trade stocks. I also trade commodities, and I also trade cryptocurrency. And I just trade one cryptocurrency, and that's Bitcoin. I don't have the time for everything else, right? And I trade the foreign exchange market. This I do on a daily basis. And I also look at the indices from time to time if I feel like I want to scalp, right? So, and it's the same methodology that we use across the board, because the markets never change. And the markets never change because human nature never change. We know how to operate one way and one way only. All right, so thanks again for your time. And if you have any questions, like I said, feel free to reach out to us in the sessions. And yeah, like I said, I'm there and I'm available to help you guys as long as I have the time. All right, so we'll leave it there for tonight, and we'll see you guys next week. Let's see how these trades in itself actually play out.